despite all these macro factors at play, we'll also be watching out for what are the next stops for Nifty as well as Bank Nifty, because there seems to be no stopping. And even on a Friday, both the indices were seen to be their life high levels. Other than that, we'll also be looking at a slew of IPOs as well as blocks that happened in the week gone by, and some of the IPOs are also have their closing dates in the upcoming week. Other than that, we'll be watching out for the Q1 earnings. Is that going to be a shocker or a surprise? Because IT will be kickstarting the result season, and HDFC merger, the implications for the market, because the delisting will happen 13th of July. But other than that, we'll try to find out what the technical front we are looking at. So these are the broad questions that we have for the viewers, and we try to find out the answers from our experts. And let me welcome on board two of our special guests. Onto the technical front, we have Rajesh Palviya, as well as onto the fundamentals, we have Sudip Bandyopadhyay. Hi, very good afternoon to both of you gentlemen, and thank you so much for your time. Firstly, Rajesh, let me come to you and ask you on the index level, because 19,200 is what we crossed onto the Friday session, as well as for the Bank Nifty touching its all-time high levels. So as per you, what's the next stop?
Good afternoon, Sissy. Very strong rally in market. Nifty is unstoppable. Almost we are trading at 19,200 level. Looking at the data setup, short covering was clearly there at 19,000 strike for call writers have covered their position, and put base is now taking place at 19,000 strike. So it clearly shows that now 19,000 is going to act as a good support area for any kind of minor dip if we gets in the market. But looking at the data, we believe that furthermore upside momentum is going to continue in the coming week, and possibly Nifty can scale up to the level of 19,350 to 19,400 in the continuation of this uptrend, as most of the underperforming sectors are now contributing and market breadth has improved quite significantly. The small cap, mid cap, all segments are doing well. So renewed buying interest is now there on the street. So looking at the confidence, looking at the sentiment and the sectorial rotation which is taking place, we believe that this rally is going to continue further higher. On the Bank Nifty, we are almost near to the next target of Bank Nifty of 45,000, as again Bank Nifty manages to cross above 44,500 resistance area, and closed quite comfortably above those levels. So now looking at the setup, if Bank Nifty continues to hold above 44,500, then next target for Bank Nifty on the high side could be around 45,000 to 45,200 in the continuation of this trend.
Okay, so those are the levels to watch out for, and the continuation of trends really continue. But let me welcome Sudip into the conversation as well. Sudip, this entire slew of block deals that we have seen of late, and the fact there have been quite a few IPOs as well, with huge amount of subscription, is that showing you any amount of red flag that it's getting to the exuberance stage, it's getting a bit toppish, and the smart investors are actually looking at checking out?
Not really, Anisha. I think what's happening is it shows that there is enough and more liquidity in the market, and people are willing to put their money to work. Some investor who has invested quite some time back in a particular counter, and at some point of time they want to reduce their shareholding in that particular stock. For some reason, for some profit booking, or maybe one fund is running out of its time. So it's par for the course. I don't think we should read too much into it. It actually the other way around. It shows that there is enough liquidity to absorb these large blocks, which is actually a very healthy trend. Some of the overhang of these investors trying to sell stocks and all that is getting absorbed in a very, very proper way without affecting the market. In most of the cases, we are seeing the share price going up after the blocks are happening. So that's a fantastic trend, I would say. So there is absolutely nothing to worry or read too much into that. Yes, of course, we have to worry about what US Fed says. We have to worry about how the rainfall monsoon progresses, its distribution, and of course Q1 earnings. But those are concerns. Those are matters to be monitored. But liquidity-wise, I think we are absolutely fine.
Okay, liquidity wise, we are absolutely still sitting in a good position. That's the take coming in from Sudip. But Sudip, what's your take on HDFC Twins? Because as we enter July, HDFC Limited will get delisted, and before that, and post the announcement, especially, we have seen a lot of momentum and a lot of investor interest coming in. So at this point in time, how do you see? Because now when the bank Nifty is at a record high levels, how much more steam do you feel that HDFC Bank can put in this particular index, and what's your outlook on HDFC Limited for the rest of the days that are still left with its being on the stock exchanges?
Well, I think HDFC Limited will track HDFC Bank prices in the ratio in which the transaction is happening, 25 is to 42. So there's nothing much to read in the HDFC Limited now. What we have to read is in the HDFC Bank. I think the bank has underperformed the other large private sector peers, particularly ICICI Bank, for some time. And if you remember a couple of years back, HDFC Bank used to attract a much better multiple vis-a-vis ICICI and other large private sector peers. So I won't be surprised if over the next few months, HDFC gets back to its old position of having a multiple which is better than its other private sector peers. A lot of things which didn't go right for HDFC over the last 2 years, including the technology challenges for which the regulator took them to task, have been set right. This transaction, once it was announced, there were a lot of nervousness around the liability mobilization capability of HDFC Bank and how SLR, CRR and other issues will be managed. Those are, I think, they have been answered properly. HDFC Bank is on way to mobilize significant amount of liabilities, which should take care of all the challenges which HDFC Limited merger will face, will bring to them. So overall, things are moving in the right direction. The mortgage business coming inside HDFC Bank should offer it an incremental opportunity of improving its long-term return. So I think, overall, we are extremely positive on HDFC Bank post-merger, and market will pretty much reflect that over the coming few months.
Extremely positive on the HDFC Bank. That's the take coming in from Sudip. But Rajesh, talk to us about the auto sector. That's been on fire of late, sitting at record high levels. Come next week, do you expect the momentum to continue? And I want to specifically ask you about Maruti as well, because that's just 200 rupees shy of the 10,000 rupee mark. A lot of stocks are sitting at life high levels, whether it's M&M, whether it's JBM Auto, Electra Green Tech, and even ancillaries like MRF, etc. Rajesh?
Whole auto as well as auto. So both auto and auto ancillary both have done well in the current week. And looking at especially for Maruti, yes, we expect this momentum can continue further, and we are projecting target of 10,000 for Maruti in the continuation of this uptrend. The kind of addition long built up is there in the today's session is clearly indicate that, yes, Maruti is now heading towards 10,000 target in the continuation of this uptrend. From that space, we like Hero Motor as well as Bajaj Auto also from the two-wheeler space. Both stock have done well. And the recovery which we have seen in the Hero Motor prices in today's session is clearly indicate that, now stock may continue furthermore upside towards 3,000, which is the immediate target we are projecting for Hero Motor. And Bajaj Auto is also looking very attractive. So for Bajaj Auto, we are projecting target of 49,550 to 5,000 in the continuation of this uptrend. So from two-wheeler, these two stocks are also looking attractive. Maruti is also looking very promising for the coming week.
Okay, so that's the take coming in on the auto pack. Maruti Suzuki as well as Hero MotoCorp, both leaders from the passenger vehicle and two-wheeler space on radar of Rajesh. But with this, viewers, it's time to slip into a short break, but don't go anywhere. More on the other side. Welcome back. You're watching Your Trades on ET Now, and we are discussing about the markets and the outlook going ahead with two of our experts onto the show. Onto the technical front, we have Rajesh as well as Sudip Bandyopadhyay. Onto the fundamental side, we are being joined. And Rajesh, coming to you for the upcoming week, just wanted to know which are the stocks that are on your radar, because we did touch upon the auto as well as the IT space. But going ahead, which are the picks that you are looking at?
So Nisha, we capital goods space to continue furthermore bullish momentum in the coming weekend. From that space, L&T is our preferred pick. Stock is enjoying all-time high trajectory, and the kind of addition we have seen in the today's session, it clearly indicates that this stock can scale up further higher from the current level towards 25.30, 25.50. So L&T is buy with stop loss of 24.40. Another stock is from IT space. TCS is looking very attractive. In today's move, stock now managed to cross its 50-day, 100-day as well as 200-day moving average in the today's session. And the kind of short covering we have witnessed in most of the large cap IT stocks, it clearly shows that in the coming week also we can see furthermore traction on the buying side in IT space. TCS is buy for upside target of 34.20. One can keep stop loss of 32.65. And the third stock is Jubilant. Stock is recovering from its recent low, and now this is the fourth consecutive day where stock is forming higher high low formation. It clearly shows that sustained buying is there in the stock prices. And looking at the data setup, we expect Jubilant Food can continue furthermore upside towards 530. So it's a buy with stop loss of 490.
Interesting stock picks coming in from Rajesh, and let me take a leaf from that discussion. Sudip, but the IT sector made quite a bit of bounce back in the week gone by, and now we are at the cusp of the earnings season. Do you think the street is baking in the worst already, or is it the fact that this is perhaps going to be the worst of the IT performance and then there will be better performance in the second half of the year?
Nisha, I think it'll be counter specific, company specific. You can't generalize. If you recollect last quarter also, we saw some of the companies coming up with howlers and some of them performing well. It will specifically depend on what sectors they are serving predominantly. If you talk about a company like a Persistent, I think they are in segments where there is significant traction and they will continue to produce good results. This will apply to many other similar companies which are serving niche segments or differentiated segments with specific skill sets. General outsourcing, general contracting work is under pressure, and that will remain under pressure. Amongst the biggies, we have seen some of the companies have started winning big orders now from different geographies. We saw Scandinavian order coming in a big way. And these are positive developments for large IT companies. And probably we are seeing the beginning of the recovery phase as far as earnings are concerned for many of the large IT companies as well. So I would be in the camp of the worst is yet to come, and probably we'll see the worst in second quarter. In that camp, I would rather say that I believe that predominantly you will find that the worst is over and the recovery phase is starting.
Okay, seems like the worst is over and the recovery space is expected to start for the IT space. With this, we'll let you go on that, gentlemen. Thank you so much, Rajesh and Sudip, for joining us today on ET Now and helping with your take and outlook on the upcoming week.